You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again. It is Education Wednesday, time to hold court on the network with a little bit of the old Options Bootcamp. Your favorite, my favorite, certainly, Options Educational Program. My name, of course, Mark Longo from the THEOptionsInsider.com. A lot of great content going up there. If you find yourself looking for a great place to check out a little bit of options content online, well, you could do a lot worse than theoptionsinsider.com, including great most actives, unusual activity, all that earnings data we're giving you. We give you a lot of great data for free because we like you folks. Then, of course, links to all of our shows over there. So maybe you missed something. Maybe you didn't know we had a certain show. It's all available there. And then, of course, if you like what you hear, this show, anything else on the network, throw a like, a star, a comment. It all does help at the end of the day. New people continue to discover the program. We see them all the time. Things are bonkers out there in the world of options. People need a safe harbor in the storm. We can be that for them. Leave a rating, a star, a comment, or review, whatever floats your boat out there. And you know who floats my boat? Options educationally speaking, of course. He is the black-hatted one himself. Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call umtum. Mr. P, welcome back to the show, sir.
Hey, Mark, it is another Wednesday. I love it. Let's do it.
Let's do it indeed. I forgot to mention, if you want to join us live, this show, everything else we do on the network, you want to get great pro Q&A sessions of your own. Just had an awesome one yesterday, and more coming later this week. Of course, we have options oddities coming up after Vol Views. Great giveaways. Just gave away our February Pro Trading Crate. Congratulations to Chi-Town Indy, our winner out there. Only one place to go. TheOptionsInsider.com/pro is the place to go to check all that out. Welcome to a lot of you. I know a lot of you come in through Options Bootcamp there, so welcome to all of you there who are taking that next step, heading on over to the Pro. It is a great place to go as we keep on going right on into a little bit of additional basic training.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in, prepare to learn. Yes, sir.
All right, everybody, let's do it. Let's get down to business. A little bit of the old basic training. And Dan, today's basic training is actually a bit of a continuation from what we were talking about on the show last week. As you will recall, Dan, last week on the show, we talked about your favorite spread strategy of all time, the stupid. Dan, after the show, you just could not stop talking about how much you love the stupid. I mean, are you happy? Are you giddy that we're back at it again, sir?
Oh, yeah, I'm just freaking tickled. Yeah.
You know, at the end of the day, everyone always slams options naming and nomenclature out there because it doesn't make a lot of sense, and they are correct to do so. Most of it is nonsense. But the stupid dare I say it, Dan, the most aptly named strategy of all time for options. What do you think?
Yeah, you can say that again, man. Totally.
We have weird stuff, iron condors and jade lizards and all kinds of weird nonsense, but the stupid aptly named. All right, I've slammed it enough. Let's see what is inspiring our conversation this week. This came from a question, Dan, from listener BL Hook. They want to know, they said, hey, Dan said on the episode about stupids that you can't think of a stupid spread as being executed at the midpoint of the spread. For example, if I buy one lot of a 12-13 call stupid, so you're buying the 12 call, you're buying the 13 call. Again, if you're not familiar with stupids, listeners, just go back a week. You'll hear the whole episode all about it. He says, buying a 12-13 call stupid one time, isn't that equivalent to buying two of the 12 half calls? Dan said no. He wants to know why not. He says, if you look at it from a P&L perspective, aren't they the same thing? And he goes the extra mile to crunch some numbers. He says, for example, if the stock closed at $15, the 12 call would make $3 that I bought, and the 13 call would make $2 for a net total of $5 worth of value for the stupid. If I went and did the same thing, if I bought two of the 12 half calls, then you'd also make $5 total, which is, of course, $2.50 times 2. He says, what am I missing from Dan's perspective? Danks, with a D, danks, and love the program. Well, thanks to you, BL Hook, for taking the time to reach out. I think he could tell Dan that you and I really secretly love the stupid, and we wanted more, another excuse to talk about it. So he's filling that role this week. But that said, he went straight for you, Danny, because you did say this, I remember, on the show last week. So what are your thoughts for BL Hook and the example he points out and why you disagree with it? So.
Yeah. And that's, it's a good question. Captain, can we just call him Captain BL Hook?
Ooh, I like that better. Captain Hook, yes.
Yeah. So, yeah, I mean, if you plug, so here's the thing. I mean, if you plug in the numbers into like to model them into like Thinkorswim or something, you will get something that looks a little bit different. You'll get something with sort of two kinks in it instead of like one exact kink at 12.5. And for that reason, so kind of the same way of looking at it, but also a different way of looking at it, is to consider like what happens at exercise, right? Like, or at expiration, I guess I should say. So sure, if we're talking calls, if the stock's below both of the strikes, sure, it expires, and it doesn't matter if you're long the 12s, long the 13s, or long the 12.5s, it's all going to expire, it doesn't matter. If it's above 13, then both of those calls would get exercised. And it is true that the average price would be 12.5, presuming you bought one 12 call and one 13 call. Your average purchase price of that stock would be 12.5, but that's where the similarities end. If we're between the two strikes, you're only going to exercise the 12 calls. And, this is just assuming you hold it all the way till expiration, just talking about simple mechanics here, not like what you would or should do. You would only exercise the 12 call and not the 13 call. So like that's nothing like being long the 12.5 calls. Further, the way option prices are dispersed among the strike prices, like the average price of the 12 call and of the 13 call, if you add them together and divide by 2, may or may not, and it may not is closer to the rightest answer, equal the 12.5 call. So, it is different for those reasons. And how important is that to think of it that way? Well, I mean, it's important. It's very important because you could only be getting assigned on half your position at not the average price. And you could be paying more or less or collecting more or less than you otherwise would if you did the middle strike, if that middle strike's even available. So, I mean, it's nuance, but it's pretty important nuance.
Yeah, at the end of the day, and I said this last week too, the only real use case I could see for buying a stupid like this is on the institutional side and when it really is for large funds who really want some sort of aggregate delta exposure. And that's the case, then they're not particularly concerned about how they go about getting those deltas. Their net position is going to say, whatever, 500,000 deltas long, whatever the case may be. They're not going to go strike by strike and say, we want a little bit here, a little bit there. In that case, I could see you buy X number of the 12s, X number of the 13s, whatever is available, and you net out to whatever deltas you wanted at the end of the day. That makes a certain intuitive sense. I mean, I don't love it from a straight positional perspective, but that's not what they're there for. They're coming in from a different objective. They're going for net deltas. They have other things on against it. It's a different ball game entirely. For the retail person who's coming in, looking at this 12, 13 vertical and saying, I want to do the stupid instead, yeah, I very rarely, if ever, would say that's a good trade to make. As we said last week, the inertial stupid, maybe where you buy the 12, things start running, and you all of a sudden you're sitting on some gains, and you might want to maybe your outlook has changed on the underlying now. Then maybe you want to dive back in, but the stock has moved. The 12s are now too expensive. The 13s are kind of the same approximate value as the 12s were before, and you want to maybe get a little bit more action, a little bit more skin in the game. I could see that kind of inertial stupid legging into something like that. But again, maybe write in. If you're stupid, you're a diehard stupid defender, by all means, write in. We are open-minded here on the show. We are willing to consider your arguments. But the initial onset, doing it at the outset like that, as a retail trader, I see very little reason, if any, to ever really do that. So again, aptly named strategy. Great question, though, BL Hook. It can seem why these things, again, the devil is in the details with these things. And sometimes if you just look at it from a P&L perspective, which is why we've always said that P&L focused mode of options education misses out on a heck of a lot. You're leaving a lot on the table when you just go that route. Oh, look, it opens here. You put it on for this price. It ends here. Here's your max profit. Here's your max loss. There's so much that goes on in between. That is really where the rubber meets the road in the world of options. That's why we don't do that on this show. When's the last time we came on here and said, hey, here's a P&L graph of XYZ option and described it to you? We don't do that. There's a reason, listeners. So yeah, maybe if you looked at it just from the numbers, it might be confusing. But at the end of the day, they are not the same thing. And again, regardless, don't do it. That's the big takeaway. As we keep on rolling into a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, getting out to the mail call here. I see got some jokesters in the live. I love our pro members. Nichols, they're called stupid for a reason. Yes, they are. They are stupid for a reason. And also, we got a fan of good old Don Schlesinger, Mr. Age of Delaquare, saying, buying options, I will follow Don Schlesinger. Either sell or don't sell options. I don't know, Dan, did you ever cross paths with Don on our network? He was Mr. Sell or don't sell options. Options are never to be bought. Very old school in that methodology, sir. Did you two ever cross paths?
No, we haven't. I kind of wish I did. I find him to be a really interesting guy. But man, I'll tell you, I am super surprised that would be his line, because him being a very famous author on card counting, there's a lot of crossover between that, what some of those guys will call advantaged play when it comes to gambling with trading, because both are all about edge. And there are definitely times, exceptions to that general rule, but too many exceptions, that sometimes you don't want to sell options when volatility is too cheap, which sometimes it is, usually not, but sometimes it is. So I'd love to have a conversation with him and get more of his deeper thoughts on it.
Yeah, great guy. He was my co-host way back in the day on Volatility Views. Listeners, if you're not familiar, He is a blackjack Hall of Famer. He literally wrote the book on card counting. So if you count cards in the casino, you're probably doing it the Don way. He still makes appearances. He's mostly retired now, but he still makes appearances every now and then on the network. Maybe, tell you what, Dan, maybe next time we have him on the network, I'll see if I can finagle you a seat at the table. What do you think?
Oh, man, I would be eternally grateful, and I will owe you.
All right, we'll see what we say. You know what? Make nice with the producer. She runs all that behind the scenes. She might be able to make the magic happen. In the meantime, sir, you could earn her goodwill forever with an awesome, a kick-ass market taker question of the week. What you got?
All right. Well, here is the question of the week. It's actually the question that I get several times on and off throughout the year. And right now I'm bringing it up because it's a good time to bring it up. So the question is, Dan, do you ever have in-person classes? And that answer right now is actually yes. We are planning our annual retreat. So this year we're calling it the Smart Trade Summit. And it is June. It's in June in Sonoma, California. That is wine country. And we would love to have you there. I'm actually doing an online training where I'm going to mention it towards the end of that presentation today at 3:30 Central, and also an encore presentation of that on Saturday. And you can sign up for it by going to markettaker.com/reg and listen to the presentation. And I'll tell you all about how to join us in Sonoma at the Smart Trade Summit at the end of that training.
All right, listeners, let's keep on rolling. See what you folks had on the brain over these past couple of weeks, and indeed this past week in particular. We were pretty active on the poll front last week, some fun flash polls as well. Our main question of the week last week was, with NVIDIA in the rearview mirror, what is the next big, all in caps, big market event that is driving your trading? And 61.3% of you said the next CPI number, followed by 25.8% for the next Fed meeting. No one had the Fed comments, which are going on today and tomorrow out there, Fed testimony at Congress. So not their next earnings season, and then not much until the election later this year, both tied at around 6.5% each. So you're mostly focused around inflation and the Fed, which, again, kind of hard to argue with this one. This is a fun one, Dan. We did this as a kind of this is our options oddities. This is our pro show we do every Friday. We talk a lot of unusual activity. And while we were doing that, we had our buddy, the options guy, Mr. Brian Overby, also known, listeners, you may remember him as the host of Options Playbook Radio here on the network. He joined me on Options Oddities this week, Dan, and he was talking up the Apple 180 straddle, expiring in about a month at the time. It was expiring on March 28th. It was trading for almost $8, $7.75. And he kept going on about how he thought that was a great screaming deal. So we put it out to our audience. He said, do you like that, or is that a little bit too rich? And just ever so slightly, they came in. 60% said they wanted to buy it. 40% said they wanted to sell it. And then lo and behold, what happened on Monday, Dan? They got hit with that huge EU fine, and they sold off like $6. So I was teasing Brian. I was like, I think you knew about that fine coming. But our listeners, luckily, were on the right side of history there, if only so briefly. I don't know, Dan, have you noticed this kind of maybe regime change we have going on in Apple right now, where it does seem like the AI-driven stocks, your NVIDIAs, and even your Alphabets and others, Microsoft, are being propelled into our top 10 most actives more frequently. Meanwhile, Apple, once the darling of the options world for a long time, the number one name out there every day, last couple of years got kicked to number 2 by Tesla, and now it seems like it's moving much farther down the list. In fact, it hit number 10 a couple of weeks ago, which is the first time I can ever recall that. Have you noticed this as well? Maybe a shift on the part of your mentees, Dan, out of Apple and maybe into some of these other names?
Yeah, definitely. And, I mean, the thing is life changes, man. And some of the really positive things about Apple are not there anymore. Like, for example, the car they were working on, which could have been a, several billion-dollar industry. They put the nail in that coffin. Their phone sales in China are down. They had this lawsuit thing. And so companies go in and out of favor. Now, to be sure, Apple Apple's been in favor for like a long, long time, but there was definitely some ebb and flow to it. Sometimes where it's just like super America's darling, and sometimes when it was still really busy, but not as much as usual. So I'm not counting Apple as down and out, but right now it's about the AI. And I'll tell you what, in the previous poll that we were talking about, I would argue not A, B, C, or D, but maybe E, that maybe NVIDIA's not in the rearview mirror, that maybe that's still going to be a driver for a while until it's not.
It certainly seems to be leading the race right now. Also, we had a couple of fun ones out here. The Jumia, this is a silly name, Jumia Technologies, ticker symbol JMIA, was all over the place. A lot of unusual activity on the Options Oddity show last week. Their 1 week, $7, which was the At the Money straddle, was trading for $1. 1 week, listeners. And we asked you whether you want to be a buyer or seller. 80% of you came in screaming buy, you said. It's up 50 cents today. Still hanging out around $7. So net, it hasn't done much. It sold off to about $6.45 and now back up to $7, almost $7 1/3. So if you were scalping your gamma, as we used to do back on the floor, you did all right with this. But outside of that, not so much. Let's do one more here because it is relevant to what we're going to be talking about in a few minutes out here as well. We also asked you folks, in honor of Leap Day, which was, of course, last week, February 29th, we asked you, how do you use leaps in your options trading? Now, before we get there, Dan, are you a big leaps guy? And if so, how do you go about using your leaps, sir?
I'm really not. I always say every option strategy, everything has its time and place of usefulness, but I don't find leaps to be very useful. I mean, I would, if I'm going to hold something for a long time, I would rather just hold something that doesn't have any time premium. I mean, yeah, you have to pay a little more, but otherwise it just slowly bleeds and bleeds and bleeds. So yeah, I don't know. I am not a super huge fan of leaps. I can't remember the last time I traded one.
Dan says, pshaw to leaps traders out there. So hold your nose during the next upcoming episode, Dan. Spoiler alert. But before we get there, let's see, what did our audience want to use leaps for? What is your use case for leaps, listeners? We asked you that exact question last week, and 62.5% of you said stock substitution. That was your primary use case. And I have to admit, if there is a use case that I have for leaps, it would be along those lines as well. And then we had, again, kind of a tie for second for the rest of them, all around between 12 and 13%. For generating income, again, covered calls and short puts. If you listen to this show for any length of time, you know why we're not huge fans of long-term premium harvesting. It doesn't really maximize the theta for you. Long-term hedging, that is a use case some people tend to like. We just had our buddy, the director of risk on the Pro Q&A out there, and they do long-term leap puts against the S&P 2 years out, and then they roll them at a year. It's an interesting approach. It's not for everybody, but there are some people who advocate that use case. And then a lot of you wrote in with other for the fig leaf, which is, of course, the strategy Brian talks about all the time, which is, of course, going the additional route of adding a little bit of income to your long-term stock substitution type play. So there you go, listeners. That is your thought on how you like to use leaps, even though Dan says he hates them all. All right, Dan, that music means we're done for this episode for this week. But guess what? If you're hanging out in the Pro, you don't have to wait another week. It's coming hot at you right now, listeners, in your ear hole. No waiting at all. Just head on over to theoptionsinsider.com/pro if you want to join that partake. And even if you have questions, get them in there. Of course, all the live folks always get bumped to the top of the list. You always have great questions, you folks. Very insightful at the end of the day. But Mr. Dan, in the meantime, they want to reach out to you between episodes of this show. Where should they go? What should they do?
Yeah, come on over to markettaker.com. And don't forget, if you're interested in joining us in person in Sonoma County in June, register for our event today, and I'll tell you all about it. Markettaker.com/REG.
markettaker.com/REG. Don't forget the second T for Theta over there at markettaker.com. That is going to do it for us on the old OBC. No live episode next week. I will be traveling down at the FIA Expo, drumming up a whole bunch of interesting new guests for you folks to listen to on the network, so stay tuned for that in the coming weeks and months. Maybe I'll throw a few mics on some people while I'm down there as well. You never know what I'm going to be up to at those kind of events. So no live show next week. Of course, if you're listening live, just wait a couple seconds. You'll get next week's show in your ear holes right now. Otherwise, we're back again in 2 weeks live, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.